Welcome back to Smart Stock Sam, the channel where we cut through Wall Street noise and hand you the kind of research that actually moves your portfolio. If you are new here, hit that subscribe button right now, because what I am about to show you today is the kind of opportunity that disappears the moment the crowd catches on. Here is a question that should stop you cold. What if a single publicly traded company already owns more than 4% of all the Ethereum that will ever circulate on this planet, and almost nobody in the mainstream investing world is talking about it? What if, lurking beneath the surface of this company's balance sheet, there is a hidden multi-billion-dollar wound that could either heal into the trade of a lifetime or blow the whole thing apart before the end of June? And what if there is a single date on the calendar, June 26, 2026, that will either ignite an explosive institutional buying frenzy or trigger the most devastating chain reaction this stock has ever seen? Today, we are going deep inside BitMine Immersion Technologies, ticker symbol BMNR, and by the end of this video, you will understand exactly why June 26th changes absolutely everything for this company and every single shareholder riding along for the journey. Let's get into it. To truly understand the scale of what we are dealing with here, we need to start from the very top, because the raw numbers on this company's balance sheet are genuinely difficult to wrap your mind around. BitMine Immersion Technologies completed a massive strategic transformation and officially moved to the New York Stock Exchange back in April 2026. This was not a minor housekeeping move. This was a deliberate signal to institutional capital that this company is playing in a completely different league now. Today, BMNR commands a market capitalization sitting comfortably between $10.15 billion and $11 billion, and the core of their entire operation, the beating financial heart of everything they do, is their extraordinary position in Ethereum. They currently control roughly 4.37 to 4.4% of the entire global circulating supply of Ethereum, making them the single largest corporate treasury of ETH anywhere on the planet. No hedge fund, no sovereign wealth fund, no other publicly traded company even comes close. Their valuation right now is driven by two enormous incoming catalysts: a structural liquidity event tied to the Russell 1000 index reconstitution and sweeping regulatory changes from the Digital Asset Market Clarity Act. But this institutional scale comes with a consequence: extreme high beta volatility. For anyone newer to investing, high beta simply means this stock moves harder and faster than the broader market in both directions. And right now, the entire fate of this company is hanging on whether Ethereum holds its critical $2,100 support level. First, let us crack open the vault. BitMine's total crypto and cash holdings actually exceed $13 billion when you account for everything on their balance sheet. The overwhelming majority of that is, of course, their Ethereum position, somewhere between 5.28 million and 5.8 million ETH sitting in their treasury. But they are not entirely concentrated in a single asset. Alongside that massive Ethereum stack, they also hold $685 million in cash reserves, a highly strategic $200 million equity stake in Beast Industries, and a modest position of 202 Bitcoin. Now, here is the strategic reality that every investor must understand before buying a single share of BMNR. This company does not operate like a normal corporation. Buying BMNR equity is essentially buying Ethereum on institutional steroids. Because their capital is so heavily concentrated in a single digital asset, every move Ethereum makes is amplified across BMNR's balance sheet with enormous force. That is the magic when things go right, and that is the terror when things go wrong. So who exactly is stepping in to buy this stock? And why is Wall Street suddenly paying attention in a way they never have before? We are approaching a structural liquidity event unlike anything most retail investors have ever seen play out in real time, and the historical precedent for it is already sitting right in front of us. Every year, the FTSE Russell indices undergo what is called a reconstitution, a mandatory rebalancing where they update exactly which companies qualify for their prestigious index tiers. BMNR officially appeared on the preliminary inclusion lists published on May 22 and 23, 2026. To qualify for the large-cap Russell 1000 index, a company must carry a market capitalization of at least $5.7 billion. At over $10 billion, BMNR does not just clear that bar, it absolutely obliterates it. The final reconstitution date is June 26th, with active index trading beginning June 29th. Now, to understand why this date matters so profoundly, we need to look at a precedent we have already watched unfold. When MicroStrategy was added to a major index back in June 2024, it instantly gained what the institutional world calls institutional eligibility. That is the technical term for giving traditional finance, mutual funds, pension managers, regulated ETFs, a fully compliant, equity-wrapped mechanism to gain exposure to crypto. The result of that single index inclusion? MicroStrategy's share price surged from $136 to $160 in a single month, and BMNR is positioned for something potentially even larger. But here is the part that most retail investors completely miss, and this is absolutely critical. When a company is officially added to the Russell 1000, the passive index funds and exchange-traded funds that track that index do not get a vote. They do not get to look at the balance sheet, evaluate the risks, and decide whether they are comfortable. They are legally mandated by their own fund prospectuses to purchase shares in every constituent of the index they track. That mandatory buying typically amounts to between 20 and 25% of a constituent's total market capitalization. For BMNR, this mechanical force is projected to trigger up to $2.15 billion in automatic, passive, completely forced buying of their shares. That forced capital will execute regardless of what BitMine earns next quarter, cares nothing about Ethereum's price on any given Tuesday morning, and flows in purely because of where BMNR sits on a list. That is the raw, structural power of index inclusion, a force Wall Street veterans understand deeply, while most retail investors are still fast asleep. But here is the thing. Washington is simultaneously handing BitMine a second, equally powerful gift. The second major catalyst transforming this company's trajectory is the Digital Asset Market Clarity Act, widely known as the Clarity Act. Right now, the crypto market exists in a state of genuine legal ambiguity. Passive, hold-to-earn yield strategies, the kind where you simply lock up your crypto and collect interest, are operating in a regulatory gray zone that has kept institutional capital sitting on the sidelines for years. The Clarity Act changes all of that. This legislation recently cleared the Senate Banking Committee and is heading toward a full-floor vote in July 2026. It shifts primary regulatory oversight of digital commodities directly to the Commodity Futures Trading Commission, the CFTC. It formally defines Ethereum as a digital commodity under federal law, and most significantly, Section 404 of the Act restricts the old passive yield models entirely, legally requiring a market-wide transition toward what regulators are calling authorized, active, use-to-earn models. There is a 12-month implementation window built into the bill, meaning the entire industry has roughly 1 year to restructure how it generates revenue from staked assets. For decentralized finance protocols operating without institutional infrastructure, this is an existential compliance nightmare. For BitMine, it is a golden invitation. And this is exactly where they leave every single competitor behind. BitMine is not sitting on their Ethereum like a passive digital savings account. Using their proprietary Maven platform, an AI-driven vault curation system built for large-scale institutional yield generation, they are actively staking approximately 90% of their entire treasury. That is 4.71 million ETH working actively right now. This operation generates annualized staking revenue of between $264 million and $289 million. As decentralized competitors scramble to comply with the Clarity Act, BMNR's institutional scale and regulatory readiness position them as the undisputed king of the newly regulated yield sector. The moat they are building is enormous, but here is where I need to stop and be brutally honest with you, because none of this narrative matters if you do not fully understand the catastrophic risk hiding underneath all of it. BitMine's immediate financial health is severely tethered to Ethereum's deeply depressed spot price. Here is the cold reality. BitMine accumulated their massive ETH position at an average entry price of approximately $3,500 per token. That means their total initial investment across the entire Treasury was a staggering $18.5 billion. But with Ethereum recently trading under heavy pressure near $2,100, the current market value of that same treasury has fallen to approximately $10.7 billion. Run that arithmetic, and it means BitMine is sitting on an unrealized paper loss of somewhere between $7.8 billion and $8 billion right now. For any newer investor watching, an unrealized loss means they have not actually sold the asset and locked in that loss. But that massive hole on their balance sheet still matters enormously to Wall Street. It terrifies institutional risk managers, spooks analysts, and bleeds directly into the stock's equity performance in a way that is impossible to ignore. We call this the contagion effect, and the numbers tell the story with brutal clarity. That multi-billion-dollar paper loss has dragged BMNR's stock down by more than 30% year-to-date. As of late May 2026, shares were hovering around $18.88. Their most recent quarterly earnings posted a loss of 8 cents per share on just $11,040,000 in quarterly revenue. Their massive staking engine is currently being entirely eclipsed by spot market depreciation, and retail investors who bought in at higher levels are feeling that pain in full. This is the existential threat that every single person holding BMNR equity must watch like a hawk between now and June 26th. Remember that Russell 1000 index inclusion and the $2.15 billion in forced passive buying it triggers? That inclusion has a hard market cap minimum requirement of $5.7 billion. Right now, BMNR clears that threshold comfortably at over $10 billion. But if Ethereum's price breaks down below its critical $2,000 support level, a devastating chain reaction begins. Falling ETH price drives down the value of BitMine's treasury. A shrinking treasury drags down BMNR's overall market capitalization. If that market cap falls below $5.7 billion before June 26th is finalized, BitMine gets pulled from the index entirely before ever receiving the benefit. And if that happens, that $2.15 billion in automatic, mandated institutional inflows does not slow down. It vanishes completely. The single biggest near-term catalyst for this stock disappears in an instant. That is not a bear case. That is an existential scenario. And the margin between safety and catastrophe right now is measured entirely by where Ethereum's price goes in the next few weeks. With these forces colliding in real time, let us look at what the actual price charts are signaling. BMNR has always been a volatile stock. Its 52-week range stretches from $3.92 all the way up to a peak of $161. That alone tells you everything you need to know about the kind of swings this ticker is capable of delivering. But right now, the stock has been locked inside a tight 4-month consolidation channel. There is a clearly established hard floor at $18 and a stubborn upper resistance ceiling sitting at $23.45. At its current price around $18.88, BMNR is hugging that lower support level dangerously closely, and the technical picture is setting up a near-perfect binary trade. The bull case looks like this. If the Russell inclusion catalyst overpowers the fear and Ethereum stabilizes, we need to watch for 3 consecutive daily candles closing above that $23.45 resistance ceiling. If that breakout confirms, Technical projections point to a swift 28 to 30% rally, with the initial target sitting at $30. The bear case is equally clear. If continued Ethereum weakness and the fear of index removal break the $18 support floor, the downside target drops by 28%, bringing the stock down to $12.92. And that is not even accounting for the psychological damage of a Russell removal announcement. Now, if you ask BitMine's own leadership, they will tell you this exact moment is the opportunity, not the trap. BitMine's chairman Tom Lee has stated publicly that the current trading discount is a prime accumulation window. His argument rests on what he calls the high beta elasticity of their balance sheet. Because BMNR uses corporate leverage in a unique way, once the crypto market turns decisively green, those $8 billion in paper losses do not recover linearly alongside Ethereum. They convert back into equity value exponentially faster than the underlying asset. The leverage that destroys value on the way down becomes a catapult on the way back up. It is a rubber band stretched to its absolute limit, and the question is simply whether it snaps back or snaps entirely. The stated long-term strategic goal of BitMine Immersion Technologies is to cross 6 million ETH in Treasury holdings. That milestone would give a single publicly traded corporation control over 5% of the entire global circulating supply of Ethereum. Think about what that actually means. Could one company ever truly become a systemic, structural pillar of a global digital commodity economy? Could a single balance sheet ever hold that kind of leverage over an entire asset class? That is the end state BitMine is building toward, not just a leveraged treasury play, but an institutional infrastructure layer that the entire Ethereum ecosystem has to reckon with. So let us bring this all together in what I am calling the inflection matrix. On one side, $2.15 billion in forced Wall Street inflows tied to June 26th and $289 million in annualized staking revenue the Clarity Act is about to legitimize. On the other, a $7.8 billion unrealized paper loss, and the terrifying possibility that falling ETH price strips away that index inclusion before it ever delivers. June and July 2026 are a strict binary inflection point. Either the catalysts converge and BMNR becomes the most explosive institutional trade of the year, or the support breaks and the bottom falls out in a way that will be genuinely painful. Before I give you my final take, I want to be very clear about something important. Everything discussed in this video is strictly for educational and informational purposes only. Nothing here constitutes financial advice, investment advice, or a recommendation to buy, sell, or hold any security. Investing in individual stocks, especially high-beta crypto-correlated equities like BMNR, carries substantial risk of loss, including the loss of your entire invested capital. Always do your own independent research and consult a qualified financial professional before making any investment decisions. Smart stock. Sam does not hold a position in BMNR at the time of this recording, and this video is not sponsored by or affiliated with BitMine Immersion Technologies or any related entity. Now here is where I leave the final call with you. BMNR is one of the most asymmetric setups I have seen in a long time, but asymmetric means it cuts both ways. If you believe Ethereum holds its $2,000 floor and that institutional mandate buying hits on June 29th, this might genuinely be the value setup of the decade. If you believe the crypto market has more pain ahead, that $18 floor is fragile, and the downside scenario here is not pretty. The conviction required to hold through this uncertainty is real. So here is the question I want you to drop in the comments right now. If Ethereum fell to $1,500 tomorrow, would that make you want to buy more BMNR because of the long-term thesis, or would that finally convince you the risk is simply too high? Think hard before you answer, because your reasoning reveals exactly what kind of investor you actually are. If this breakdown gave you clarity you could not find anywhere else, smash the like button. It takes 1 second and it tells me to keep making content at this depth. Subscribe to Smart Stock Sam so you do not miss our live update the moment the final Russell list drops on June 26th. That is the video you cannot afford to miss. And if you want to support this channel directly, YouTube's Super Thanks feature lets you back the independent research that goes into every video. Every contribution keeps us unsponsored and completely in your corner. This is Smart Stock Sam. Stay sharp, stay disciplined, and I will see you in next update.